Right, so welcome to part 2 of investing in China stocks, understanding the risks and the rewards. Now, if you've not watched part 1, pause this video, watch the first part of this video. Once you're done, let's move on. So in the previous lesson, we talked about the tremendous growth opportunity that China presented to investors, specifically stock investors, because China's GDP per capita today is equivalent to where the US was 40 years ago. So in essence, investing in China's stock market today is like investing in the US stock market 40 years ago. Now, 40 years ago, the S&P 500 was trading at 90 points. And despite the ups and downs, the two financial crises, the dot-com crash, the great financial crisis, the S&P 500 today is at 3,000 points. That's a 32-fold increase in your wealth, over 3,000% increase in your investments. This is China's stock market today. As you can see, it's choppy like most stock markets. It's on an uptrend. And again, if you were to start investing in the Chinese market today, it's equivalent to the S&P 500 back in 1976. So it's kind of like having a time machine with Doc Emmett Brown going back to the past, getting in there and then riding this huge potential growth into the future. Now, not only will the China stock market grow tremendously in the future, but it's a statistical, inevitable fact that China's economy will soon become the biggest economy in the world. And the reason is because China's GDP is growing at a double-digit rate than that of the US, right? The US is growing its GDP at 3%, with China growing at about roughly 7%. And based on that growth projection, China's GDP will exceed that of the US by the year 2030. So miss out on this amazing investment opportunity at your own peril. Now, what is driving this growth? There are two things. The first thing, which I mentioned in the past video, was the massive population growth in China. China has 1.4 billion people. And these are consumers, these are workers producing goods and services, right? In the US, there are 332 million people. So if you think about it, one China is equivalent to 4.5 United States of America in terms of population. But it's not just about the population size. There's no point having more people if they are dumbasses, right? But the point is China is producing more college graduates than any country in the world. Check this out. These are the countries with the most STEM graduates. STEM stands for Science, Technology, Engineering, and Mathematics. And this is based on 2016 data, which means now it's even more, right? So from 2016, you can see that China produced 4.7 million STEM graduates worldwide. Second in line was India, 2.6 million, and third in place, the United States at about over 500,000, Russia, Iran, Indonesia, and Japan. Now, in terms of the share of the world's college graduates in terms of percentage, China produces 18% of the world's graduates every year, followed by the US, 14%, India, 11%, and so on and so forth. So what happens to a country that's able to produce more graduates every single year? It means more educated people in the population. Now, more education means greater wealth, greater spending power, greater productivity, and greater innovation. All this is the fuel that will drive the growth of the businesses in that market and hence drive the stock market higher. Now, I read in the comment section in the previous video that some people have this misconception that Chinese businesses are not innovative, that Chinese people only steal people's ideas from all around the world and use it as their own. Well, I must say there is a grain of truth in that. Many years ago, 20, 30 years ago, the Chinese businesses just stole ideas from people. That's true. But China today is a very different place than it was in the past. In fact, China is now filing more patent applications for new inventions than the United States. In fact, China has overtaken the United States in new patent applications from the year 2011. And USA Today reported that China outspends the US in late-stage research and development. China is expected to spend twice as much as the US on late-stage development research by 2018. All right, currently China spends $658 million on research and development as compared to the US spending $300 million. Here's the final slide. Patent filings for quantum technology. The US used to produce more patents for quantum technology than China. By the past decade, China has leaped ahead, and now China has filed 492 patents for quantum technologies compared to 248 in the US, South Korea 45, the EU 31, and Japan 30. And again, this is from the Washington Post. So again, what does all this mean to investors? It means that Chinese businesses are catching up to the US businesses in terms of innovation and growth. Check this out, guys. China has nearly as many firms in the global Fortune 500 today as the United States. So this is from Bloomberg, and you can see that the number of companies in the Fortune 500 from the US has been on a steady decline since 2007. But in China, the number of companies in the Fortune 500 is growing and will soon overtake the US. Japan has also been declining. The UK and Germany, well, Germany has been pretty flat. Australia has been flat as well. Here's the next slide. The world's largest tech companies by market capitalization. Among the top 15, again, the US still dominates. The US holds 10 of the biggest tech companies in the world. You've got Apple, Alphabet, Microsoft, Amazon, Facebook, Intel, Cisco, Oracle, IBM, and Nvidia. And China used to have none, but now they've got two in the top 15. They've got Tencent Holdings as well as Alibaba. Alibaba is the largest e-commerce company in China. Tencent is the largest social media company in China and the largest online video company in the world. So like I said previously in the last video, 70% of my investments are still in US companies. 30% are in Chinese companies. But as we go forward in time in the future, I foresee that China companies will make up a bigger proportion in my portfolio, because eventually most of the biggest companies in the world will be between the US and China, and China will make up an increasingly bigger percentage of the allocation. Now, with China now having the largest population in the world, as well as the largest percentage of college graduates in the world, what does it mean? It means more spending power, more consumers that's going to buy stuff, right? And that's important as an investor. We want to invest in markets where there are a lot of consumers buying stuff, driving sales and profits. So when you invest in Chinese companies, you're investing in the secular growth of the Chinese consumer who's going to spend a lot of money in the future, right? China's urban middle class is expected to grow to 800 million by 2030, which is again 2.5 times the entire US population. Their middle class is equivalent to 2.5 times the entire US population, and they are buying expensive shit like Gucci, all right? Let's take a look at retail sales. Now, you can see that as of 2019, China's retail sales has matched that of the US at $6.2 trillion. And in fact, as of now, 2020, it has exceeded total US retail sales. Now, this is even more mind-blowing. I'm sure many of you have heard the greatest shopping period in the US is Black Friday, Cyber Monday, Thanksgiving, right? Now, look at this slide. Now, this was as of 2019. If you add the total sales, to be more specific, if you add the total online sales of all the companies like, Amazon and eBay, right? The total sales from Thanksgiving, Black Friday, Small Business Saturday, Sunday, and Cyber Monday, these 5 days generate in the US $28.49 billion total online retail sales. in China, one company, which is known as Alibaba, generates 38 billion in sales in one day. And in China, they don't celebrate Thanksgiving or Black Friday. They celebrate a day called Singles Day, which is their greatest shopping day in the year. So can you imagine that? In China, one company in one day, the entire online sales exceeds the entire US online sales for 5 days. That's how big the Chinese consumer is. So what do people buy from Alibaba? Ironically, they buy US goods as well, besides Chinese goods, right? Almost 300 brands each sold goods worth more than 100 million Chinese yen. That's 14 million US dollars per brand. And what are the brands that Chinese people are buying in China? They are buying Apple products, Nike, Estee Lauder, and Giorgio Armani. So in my investment portfolio, I own a lot of Apple shares. I own a lot of Nike shares. I also own Estee Lauder. You know why? Because although they are US companies, but most of their sales are generated in China. So by investing in Nike, in Estee Lauder, I'm essentially also riding on the secular growth of the Chinese consumer. Now, many people see the US and China as rivals, right? Competition, win-lose. I don't see it that way. I see it as cooperation. It's a win-win situation if they work together. You know why? Do you know that the US is the greatest beneficiary of the Chinese consumer? Here are a few interesting facts. Almost 400,000 Chinese students study and live in America each year. They spend a combined total of $13 billion from 2017 to 2018 in terms of tuition fees and living expenses. Think of how much jobs they create in America. Next, there are about 3.2 million Chinese visitors each year coming to the US. Each China tourist on average spends 6,000 US dollars. This brings in a total of $19.7 billion of income into the United States. Next, China will purchase approximately 7,000 Boeing aircraft planes worth $1.1 trillion in the next 20 years. China has already bought thousands of Boeing planes in the past. So when Trump wants to start a trade war and a cold war with China, I'm like, what the fuck are you doing? Right? You're going to lose a lot of business for your American companies like Boeing. If China gets pissed off and they say, you know what, screw Boeing, I'm going to buy from Airbus, Boeing's going to lose lots and lots of jobs. They're going to lose lots of money. They may not survive, in fact. Right? Next, China is the biggest overseas market for the three major US auto manufacturers, GM, Ford, and Chevrolet. In 2017, Buick sold 1.29 million cars in China. Ford sold almost 1 million. Chevrolet sold about 500,000. In 2018, the US exported about 250,000 passenger vehicles worth $9.9 billion to China. So you can see that there's no other country in the world that contributes as much to the American economy than China. So with the massive investment opportunity that Chinese businesses offer, why aren't more Western investors buying Chinese stocks? It's because of a lot of negative perception that they have because of political propaganda. And a lot of it is pure ignorance because they don't really understand the country. They've never been there. They don't really understand what's happening right now. And the good thing about me being in Asia, being in Singapore, being in neutral countries, I get to see the propaganda on both sides. I get to see the reality, the truth behind the perception. It's kind of like a lot of people are in that matrix and they see what the powers that be want them to see. But once you're out of the matrix, you get to see what's the real world. So I'm going to share with you perception versus reality that Western people tend to have of China. First perception is that China is a communist country. Yeah, right. China is communist like I'm Santa Claus. Yeah. Hundreds of years ago, China was a communist country. And today, the political party, the CCP, the Chinese Communist Party, they still retain that word communism. But the reality is the country is not communist at all. In fact, let me tell you this, Chinese people are the most capitalistic people in the world. Chinese people love money. They love money so much that during Chinese New Year, do you know what is the greeting that Chinese people give each other? It's not Happy New Year, it's 恭喜发财. Do you know what that means? 恭喜发财 translated means, I wish you get rich this year. That's what they mean. Can you imagine a country where people greet each other at the beginning of the year, I wish you get rich, I wish you get rich, I wish you get rich. How capitalistic is that? Right? Communism is about everyone is equal. Right? Let me tell you something. In certain parts of America, it's more socialistic than in China. And this comes from Jim Rogers, a great American investor. For example, in America, they have unemployment benefits. They take care of people who can't get a job. In China, there's no such thing. In China, if you are unemployed, you are on your own, brother. Okay? And because of this capitalistic economy in China, like I said, today, right, the number of Chinese billionaires outpaced the US 3-1. China is getting richer than anywhere in the world. Communism, my ass. All right, myth number 2. A lot of people think you can't trust China companies, right? They doctor their books, their financial statements are not well audited, and so on and so forth. So why do people have this perception? Well, it's definitely true that there are Chinese companies that are fraudulent, that doctor their books. But every country has those kind of companies. Just because one company is fraudulent or few are fraudulent, it doesn't mean they're all like that, right? And of course, recently we had a big case about this company called Luckin Coffee from China. It's a coffee chain in China that a lot of people invested in from the West, and they turned out that the sales were fabricated. It was a fraudulent company, and the stock price collapsed. It lost 75% of its value. So obviously, because of that, people say, you know what, one Chinese company is bad, they're all bad. But you can't generalize in that way, because if you do that, it's going to limit your investment opportunities in the future. It's going to create a perception that limits you, right? I'll give you an example. One of my friends went to Thailand, and he saw this really beautiful hot girl at a bar. He picked her up, brought her home to his hotel room, and found out that this beautiful Thai girl had a dick. All right, now there's nothing wrong with that if you're into that, but my friend was not into that, right? And he said, because of this, I will never ever, pick up a Thai girl again. Now that's not fair. Just because one Thai girl has a dick doesn't mean they all have dicks. In fact, I know a lot of Thai girls, they don't have dicks, all right? But once you generalize that they all have dicks, guess what? You're going to miss out on meeting a lot of nice Thai girls. In fact, the reality is most Thai girls don't have dicks. In fact, a lot of American girls have dicks. I've seen it on certain websites, accidentally, right? Now, jokes aside, here's the point. In every country, there are fraudulent companies. Look at the US. In fact, the biggest frauds, accounting frauds, have come from the US, not from China. Have you heard of Theranos? Run by Elizabeth Holmes, and she was thought to be the youngest billionaire in America. And it was found that her entire company was a fraud, right? And it collapsed, went to zero. Investors lost $600 million. And then we had Bernie Madoff, the biggest conman in the world, where he conned people out of $64 billion. His entire fund was a Ponzi scheme. And then we had WorldCom, which was one of the biggest telecommunications company listed on the US stock exchange. It went to zero. Investors lost $115 billion. Enron was one of the biggest energy companies in the world. They found that they doctored their accounts, the stock went to zero, investors lost $60 billion. All these companies were listed in the US market or on the US market, all right? AIG, American International Group, the biggest insurance company in the world, was found to have doctored their accounts for about 5 years, back in 2005. Now, I don't know the size of the fraud, but they were fined $1.6 billion when they were discovered. Tyco, one of the biggest security systems company listed on the US markets, was a $600 million fraud. So reality is that every country, every stock market has its fair share of fraudulent companies. What is important for an investor is to know how to analyze the business, to study the financial statements, to identify red flags. I invest in a lot of China companies, but I did not invest in Luckin Coffee, not because I was lucky, it's because when I studied the financial statements, I felt that something was wrong, something was not right. So I teach my students in the value momentum investing course how to analyze financial statements, to look for discrepancies, so we avoid these companies that could be risky, that could have its books not entirely well done. Right? It's kind of like I told my friend that you can't dismiss all Thai girls. Many of them are beautiful girls, great girls, right? But you have to identify and look at their Adam's apple. If it's too big, right? Something's wrong, you're gonna walk away, right? So same thing with analyzing a business. I'm gonna teach you in my course how do we identify red flags in businesses, even US companies that we got to identify and avoid, to avoid investing in a lousy stock. Myth number 3, China companies are smaller and less innovative or less advanced than US companies. Maybe sometimes, but not all the time. Reality, in fact, some China companies are way ahead and way more innovative and way bigger than US companies. For example, social media. In the US, the biggest social media company is Facebook. And for many, many years, Facebook was just a social media company, right? Where you connected with people, companies could advertise through Facebook, Instagram, and WhatsApp. These 3 products are owned by Facebook. Now, recently, Facebook is launching 2 innovative ideas that's going to be a game changer. Its first idea is Facebook is launching what is known as Libra, which is Facebook's cryptocurrency. So with Libra, you can go around buying stuff using the Facebook app and paying through the Libra currency. Is it a great idea? It's a fantastic idea, right? The second idea Facebook has that they just launched is known as Facebook Shop, where now you're not just connecting people, but you could set up your own shop and selling things from your Facebook page. Is it a great idea? That's a great idea. Here's the problem. These are not new ideas. These ideas have been done by the Chinese social media company many, many years ago. Now, in China, they don't use Facebook, they don't use WhatsApp, they use what is known as WeChat. So WeChat is the largest social media app used in China. It's owned by Tencent. So Tencent is a stock that I own in my portfolio because it's the largest social media company in the world. And Tencent has the same payment system that Facebook wants to use, except Tencent has been doing it for many, many years. So in China, people don't pay with cash anymore. Everywhere people go, they pay using WeChat. They pay using this kind of like digital currency, right? In fact, if you go to China today and you buy something, you want to pay in cash, people don't take cash anymore. They stare at you like you're some kind of uncivilized barbarian because people pay using WeChat, using this digital payment system. In fact, that's why now in China, even beggars, that's right, beggars on the roadside, they don't take cash anymore. They say, what's cash? We don't know what cash is. You pay them using the QR code on your WeChat app. That's how advanced China is. And this technology has now given rise to a lot of employee-less shops in China. So now when you go to grocery shops in China, there are no employees there in the shops. You go in yourself, you take your stuff, and you pay using WeChat. That's how advanced it is. And in Chinese social media, WeChat, again, you can sell things online, you can pay online, and these are things that Facebook now wants to do. So where did Facebook get this idea from? Who's copying who right now? Okay, you never know, right? Another example is Alibaba. So in the US and around the world, we know the greatest e-commerce player is Amazon, right? It's all about Amazon, right? Or eBay. Now in China, the biggest e-commerce player is Alibaba. How does Alibaba compare to eBay and Amazon? Let's take a look. Now, in terms of total GMV, gross merchandise value, the amount of goods changing hands in terms of the value, right? Amazon is 335 billion goods changing hands a year. eBay is 85 billion. Get this, Alibaba is 3 times bigger than Amazon in terms of GMV. Alibaba sells 922 billion worth of goods a year, right? Monthly active users, number of people using Amazon in the world, 200 million people. That's a lot. eBay, 66 million, but Alibaba is 824 million. It's a lot bigger, right? Now, in terms of total revenue, Alibaba is still behind Amazon, right? Amazon's total annual revenue is 296 billion US dollars. eBay is 10 billion. Alibaba is 71 billion. So Alibaba still has a lot of potential to grow their revenue to catch up to Amazon. Because although Alibaba sells more goods than Amazon, but they take a smaller percentage of the goods sold as revenue because they take commissions of the goods because they are just a platform that allow buyers and sellers to sell products online. But in terms of net profit margin, check this out. Amazon's net profit margin is 3.6%. eBay, 16%. Alibaba from China, 28% net profit margin. Amazon is growing its revenue at 24% a year. eBay at 13%. Alibaba's revenue growth is 44% growth. So you can see why in my investment portfolio, besides having Amazon, Alibaba is a huge part of my stock investment portfolio. Market capitalization, market cap. So Amazon is still the biggest in terms of market cap at $1.2 trillion. eBay, 34 billion. Alibaba is only half the market cap, which is 500 billion. Now, why is this exciting? Because it only means that Alibaba has the potential to double in price, to double in value to meet Amazon's market cap. So to invest successfully in China companies, you have to understand what the people in China are using. What are their equivalents to social media, to video streaming services, and so on and so forth. So here's a quick list. In China, they do not use Facebook, they do not use WhatsApp, they do not use Instagram, they do not use PayPal or Apple Pay. Everyone in China, I mean almost everyone, uses an app known as WeChat. WeChat is a social media app used by the majority of people in China and is owned by a company called Tencent. Now WeChat is the equivalent of Facebook plus WhatsApp plus Apple Pay plus Skype plus Instagram rolled into one. That's right. It's a super app that does everything into one. In China, people use another app called Weibo. And Weibo is kind of like Twitter and Blogger rolled into one. In China, people use QQ, which is their version of MSN Messenger. And QQ is also owned by the same company, Tencent. All right. In the US, when we want to order food, we use Grubhub. We use Uber Eats. Then there's Groupon. We want to buy things in bulk. And there's Yelp, for example. In China, they have a super app known as Meituan Tianping. So this was the stock I bought and I doubled my money in the last nine months. So Meituan Tianping in China is kind of like Grubhub, Uber Eats, Groupon plus Yelp all rolled into one. All around the world, we watch free videos on YouTube. In China, their equivalent is called Youku. And Youku is owned by Alibaba. In the US, we have got eBay, right, where consumers sell to other consumers. In China, it is Taobao, which is owned by, again, Alibaba. In the US and around the world, we search using Google, that's owned by Alphabet. In China, their version of Google is Baidu. Although I have to mention, in my opinion, although Baidu is so-called the official search engine of China, but most Chinese people don't really like to use Baidu to search for stuff, right? Because they find that it's really censored by their government. So they find other means, which, I can't tell you here, but basically I don't invest in Baidu for those reasons, right? In the US, people use PayPal, and PayPal has 305 million monthly active users. In China, they use Alipay, which has 1.2 billion monthly active users. And Alipay is owned by Alibaba. All right. So basically, people in China, they pay not using cash, like I mentioned, but they pay using two major apps. One is WeChat by Tencent, one is Alipay by Alibaba, and they capture basically the entire market share. In the US and all around the world, we buy things online from Amazon. Again, they've got over 200 million monthly active users. In China, people buy things online from this place called Tmall or Tianmao, as well as from Taobao. And this is owned by Alibaba. Number of monthly active users, 846 million monthly active users, which is kind of like almost 4 times that of Amazon's monthly active users. So it's phenomenal size and growth. So do all China companies make good investments? Are all Chinese stocks safe to invest in? Of course not. The same goes for any other market. For example, in the US market, there's a total of around 8,000 stocks listed on the US markets. Now, are all 8,000 stocks investable? No. In fact, for me, out of the 8,000 stocks in the US, only the top 1% of the stocks are high quality enough for me to invest in. The top 1%, which is about 80 companies. Now, out of the 80 companies, I select the top 1/3 of 1% to be my portfolio. This is what I call the best of breed, which is roughly anywhere from 25 to 30 stocks in my portfolio. So the same thing goes for stocks in any other country. So in China, there's about roughly 6,000 stocks on Chinese exchanges. And again, of the 6,000, I would only say less than 1% are investable. And that makes it about 60 companies. And again, out of that 1%, which are the best of breed? The top 1/3 of 1%, which would be around 20 companies at the very most. So to be a successful investor, you gotta have the skills of knowing how to identify the top 1/3 of 1% in any market, the US, China, India, Asia, and only when you invest in these high quality companies and buy them when they're significantly undervalued can you make a huge fortune in the stock market. So in my value momentum investing course, I teach my students how to analyze businesses. How do you read a company inside out? Because when you're buying a stock, you're buying a business. And how do you select only the best of breed stocks in any market? So what are the criteria I look for a stock to meet my top 1% or top 1/3 of 1% criteria? Well, a couple of things. Number one, I only invest in companies with a history of consistently increasing sales revenue, net income, and cash flow from operations. So for example, there are so many China companies I've mentioned here. Are all of them ones that I'm going to invest in? No. For example, I'll never invest in Baidu, right? It fails my criteria. I'll never invest in Weibo, fails my criteria. One of the ones I'm invested in is Alibaba. Why? Well, take a look. Passes my first criteria. By the way, I've got altogether 7 criterias. Criteria number 1, Alibaba has consistently growing revenue for at least 5 years, right? That's one of my criterias in the first criteria, right? Number 2, it has got consistently increasing net income for the last 5 years. And most importantly, Alibaba has consistently increasing cash flow from operations. Now, in any market, be it the US or China or Asia, only the top 1% of companies are able to pass this first criteria. Criteria number 2, I only invest in companies with a wide economic moat or sustainable competitive advantage that protects it from competition, and the competition has to be insignificant. So for example, in the US, I want to look at brand monopolies, companies with huge economies of scale, like Walmart, like Amazon, for example. In China, again, Alibaba has that brand monopoly, the huge economies of scale, and its competitors are pretty insignificant. So before investing in a company, you always want to compare it to its competitors, and it has to blow its competition away. So for example, Alibaba has one major competitor known as JD.com. And you can see, although JD.com has a higher revenue than Alibaba because of its business model, but look at Alibaba's net income, 149 billion renminbi versus JD with only 5 billion renminbi. In terms of return on equity, Alibaba is 19% return on equity with JD only 6%. Gross profit margin, Alibaba has 44% gross profit margin and JD.com with only 8% gross profit margin. Alibaba has 29% net profit margin, JD.com only 1% net profit margin. So you always want to invest in the best of breed, the company that blows away its competitors. The next competitor is known as Pinduoduo, which is the third in line in the e-commerce space. And again, take a look. Compared to Alibaba, Pinduoduo has much lower revenue, has negative net income, losing money, negative return on equity, right? Although it's got a higher gross profit margin, but it's got a negative net profit margin. So you got to have the skill of knowing how to analyze the best companies before making an investment and getting really rich from the stock market. So once again, these are just 2 of the 7 criteria I use to identify the best of breed companies to invest in. So if you want the opportunity to invest in the highest quality growth companies in China, but you have no idea how to find the companies, you have no idea how to do the research, you don't know how to buy a Chinese stock, for example, you can take the value momentum investing course where I'll give you all the skills, all the strategies, a lot of case studies on how you can develop this ability. Now, for those of you who want me to do everything for you and say, Adam, you do the research, tell me what you're buying, right? Yeah, you can subscribe to the Ultimate Investors Playbook. So this again is an annual subscription where I will do the cooking for you. All you're going to do is to have the meal. So every single month I do an in-depth research and study into the US stock markets, the Chinese stock markets, the Asian stock markets. And every single month I identify the 2 best companies that I'm investing in or I'm putting into my watch list. And again, they are a combination of US companies, China companies, as well as Asian companies, and sometimes even European companies. Not only that, but you get timely alerts the moment I make an investment. The moment I buy something, I sell something, you get an immediate alert on your email and through Telegram. So you get to watch me invest and make decisions live. And again, if you're interested, go visit insight.piranhaprofits.com. Now, let me share a bit more about how do you buy Chinese stocks. Now, like I mentioned, there are about 8,000 stocks on US exchanges, the New York Stock Exchange, American Stock Exchange, NASDAQ Stock Exchange. In China, there are 3 main stock exchanges. You have the Shanghai Stock Exchange, the Shenzhen Stock Exchange, and the Hong Kong Stock Exchange. Now, between Shanghai and Shenzhen, there are 3,800 companies listed there. In Hong Kong, there are 2,500 companies. Now, you can buy stocks on any of these exchanges, but you can't buy them directly from Shanghai and Shenzhen. You have to always go through the Hong Kong Stock Exchange in order to buy stocks listed in these 2 exchanges. It's called the Shanghai Hong Kong Connect System or the Shenzhen Hong Kong Connect System. Now, there are altogether 4 classes of shares in China, right? You have A shares, B shares, H shares, and US Chinese ADRs, which are Chinese companies listed on US stock exchanges through American depository receipts. So you can buy Chinese companies on any of these exchanges. Now, first of all, A shares are companies that are listed on Shanghai or Shenzhen, and they trade in renminbi, they trade in Chinese yuan. And again, you can buy A shares via the Hong Kong Exchange Connect system. All right. Now, you also have B shares. B shares can be bought directly by foreigners as well, and they trade in both US dollars and Hong Kong dollars. Now, forget B shares. Most of the companies there are crap. Okay, so totally not interested in B shares. Most of the companies I buy from China are H share companies. Now, H stands for Hong Kong. So these are China companies that are traded on Hong Kong stock exchanges. And you can buy these companies from any reputable stockbroker in the US, like Interactive Brokers, for example, right? So these shares trade in Hong Kong dollars. And the great thing about these H shares is that I trade options on them as well. So I sell covered call options, I buy protective puts, I sell cash secured put options on these China companies listed in Hong Kong. Another option is to buy China companies listed in the US via ADRs, or American Depository Receipts. And on US markets, there are about 353 China ADR companies listed. Now, as part of the Trump Cold War and trade war, he has threatened to delist the China companies from the US markets, right? Because if they don't meet our requirements in 3 years, they'll get delisted. Now, could this happen? Now, after talking to a lot of people in the business, in the asset management industry, I believe that it's unlikely it's going to happen, because Wall Street is going to lose billions of dollars if this happens. So Wall Street is going to lobby the US government to not go through with this. But of course, there is always a possibility. So personally for me, I prefer to buy China companies listed on Hong Kong or listed in Shanghai, so I don't get into the crossfire of this political dispute. Although, again, like I say, it's unlikely to happen, but personally, I try to avoid US ADRs for this particular reason. All right, so once again, if you're interested to find out more about the Ultimate Investor's Playbook, visit insight.piranhaprofits.com. I pick and analyze 2 high-quality companies at least every single month. So these are the 10 stocks that I analyzed and I picked for the last 6 months of the year, the last 5 months of the year. So again, we've got a combination of some China companies, some Asian companies, US companies, and so on and so forth. And out of the 10 companies I presented, as of early June, you can see that all of them are above water. Only one of them is below water for now, but this will soon be way above water. It's only a matter of time. Total portfolio gain is 13.6% return in 4 months. So how does that compare to the S&P 500 if you just bought the S&P ETF? As of 1st of June, the S&P 500 was up 10.8% as compared to our UIP, 13.6%. So overall, our UIP portfolio has outperformed the S&P 500 ETF by 26% within the same period. All right. So again, remember, China offers amazing investment opportunities that can really grow your wealth over time. But just as in the US markets, not all Chinese companies are investable. Only 1% of the 6,000 companies are investable. And I only invest in the top 1/3 of 1% in any market. And that's the key to building a winning portfolio. This is Adam Khoo. May the markets be with you. And if you have any other questions, send us an email, or if not, subscribe to this channel to get our latest videos.